Hey, welcome back everybody to Altcoin Daily. My name's Austin. The cryptocurrency market is dropping. Bitcoin slips below $19,000 as Ethereum drops 9% and nears 1K. My question is, what is causing this uncertainty? Well, in today's video, if you hold crypto, I want to share with you the most recent news to keep you informed as an investor. Like always, check the timestamps down below. And let's jump in, starting with our top story of the day. The SEC has rejected Grayscale's spot Bitcoin ETF application, and a mere hour after, Grayscale decided to sue. Grayscale sues the SEC over their Bitcoin ETF application rejection, and then the market instability followed. Now, why did they get rejected in the first place? Well, the SEC rejected them, citing concerns about market manipulation, the role of Tether in the broader Bitcoin ecosystem, and also the lack of a surveillance sharing agreement between a regulated market of significant size and a regulated exchange. This is nothing new. These are the exact same reasons they've rejected other Bitcoin ETF applications over and over again. Now, is market manipulation a valid concern? Is the lack of surveillance sharing a valid concern as well? I think the biggest reason they're scared of something like this is because they can't control the cryptocurrency market like they can control US markets. Cryptocurrency is global, trades 24/7, as opposed to the US stock market, which just gets shut down at the same time each day. Now, in Grayscale's lawsuit, in their filing, they simply asked the US Court of Appeals of the District of Columbia to review the SEC's order, aka they're appealing. In a direct quote from Grayscale CEO, he says, "Grayscale supports and believes in the SEC's mandate to protect investors, maintain fair, orderly, and efficient markets, and facilitate capital formation, and we are deeply disappointed by and vehemently disagree with the SEC's decision to continue to deny spot Bitcoin ETFs from coming to the US market." So essentially, what Grayscale's attorneys plan to argue is that the SEC has already allowed similar products that are like other products already trading, in this case Bitcoin futures ETFs, in the US markets. And that's a good point. Why are Bitcoin futures allowed to trade openly on US markets, but a Bitcoin spot ETF isn't? Shouldn't they be held to similar standards? We will have to see how this lawsuit plays out. Give me your thoughts on this down below. And in my opinion, the one thing we do need, one way or another, is just clarity from the SEC so the US doesn't fall behind. And next up, breaking news if you hold Ethereum. The difficulty bomb has again been delayed. Gray Glacier upgrade goes live on the Ethereum network, pushing the difficulty bomb back another 100 days. And just to get specific, the upgrade called Gray Glacier occurred at this block today on June 30th, with the sole goal of introducing changes to the parameters of the network's difficulty bomb, pushing it back to this block or roughly 100 days later. So what is this difficulty bomb and what are the implications of the pushback? The difficulty bomb, which has been a part of Ethereum since inception, is a piece of code responsible for exponentially increasing the difficulty of mining Ethereum. And thus, if you make it more difficult to mine, it disincentivizes miners to continue their operations as the network transitions from proof of work to proof of stake. So they originally put this into the code way back in the day to essentially make sure the merge happened. Hey, this difficulty bomb is going to go off. We better make sure we're transitioned or in the process before that happens. Of course, we know time and time again that upgrade has been delayed. And previously, the difficulty bomb mechanism has been pushed back in 5 different network upgrades: Byzantium, Constantinople, Muir Glacier, London, and the most recent Arrow Glacier back in December 2021. Well, now it's June 2022, and they pushed it back again. So what does this mean to you as an Ethereum holder? Well, one thing that is different is right now, there is already an implementation of the merge already live on Ethereum's Robuston testnet since the beginning of June. And we were told, because of that, the full transition to the merge on the main chain could happen as early as August of this year. Of course, things have now changed. Pushing the difficulty bomb back another 100 days, however, now makes it unlikely that this schedule will be met. with the update to EIP 5133 proposal, that pushback, now pointing to mid-September as the new time frame for the implementation of the mechanism. Okay, give me your thoughts on this down below. If you hold Ethereum, does this anger you? Are you used to this? I mean, they've done it time and time and time again. Par for the course at this point, I'd say. But as I get more info, I will keep you updated. Next up, a piece of bullish news for the Algorand blockchain. Music streaming company Napster to launch its own token on Algorand. So the new token will be called Napster as per the streaming service. And the company did release a light paper outlining its plans to build out its existing music streaming ecosystem now on the Layer 1 blockchain, although the launch date has yet to be announced. In a direct quote from that light paper, Napster will unlock all the opportunities of Web3 for fans, rights holders, and music makers. It added that the Algorand blockchain is the only carbon-negative blockchain infrastructure currently in existence, and that's why they liked it. The irony here is kind of funny to me because Napster was known back in the day for being able to copy and steal all the music all over the internet with no verifiable rights online to those music makers. And this obviously gives those artists, anything on the blockchain would in theory give those artists verifiable ownership of their work. Give me your thoughts on this down below, and it should be noted that yes, they chose Algorand because it's a quote-unquote green blockchain, good for the environment, but also, a few months ago, in May 2022, Napster was acquired by blockchain firm Algorand and Matt Zong's HiveMind Capital Partners, which continued to offer Napster's paid music streaming service. All right, if you hold Algorand, you love this, let's keep moving. Next piece of adoption news for Chainlink. Chainlink smart contract products go live on the Phantom blockchain, meaning two protocols of Chainlink, their keepers and their verifiable random function, will now allow developers to deploy more sophisticated applications on the Phantom network. So just to define these two products, Keepers is a decentralized transaction automation service from Chainlink that allow developers to automate any smart contract function using custom triggers. Developers can set predefined conditions that Keepers continuously check, and when those conditions are met, it will trigger the smart contracts function, i.e. making developers' lives easier, and also a VRF, on the other hand, uses on-chain randomness that can generate fair in-game outcomes in blockchain games, or randomly select governance participants for specific tasks. In a direct quote from the CEO of Phantom, having Chainlink's VRF on Phantom allows our ecosystem developers to incorporate tamper-proof, unpredictable outcomes into their dApps that can be used for GameFi and NFTs, non-fungible tokens, or other real-world use cases. All right, what do you think on this? It's interesting because while all these L1s, even L2s, are competing with each other, Chainlink seems to be working with all of them, or many of them. Let's keep moving. And next piece of news, an update on the situation with Celsius. Apparently, it's being reported from the block that FTX passed on a deal to purchase Celsius due to a deficient balance sheet. And this is interesting because FTX did not pass on deals to take out small positions in Voyager and BlockFi. Some of those deals are still being negotiated, but it's being reported that they did say no to Celsius. FTX had talks with Celsius over an acquisition, but walked away on account of a $2 billion hole in the lender's balance sheet. The Sam Bankman-Fried helmed crypto exchange, FTX, also found Celsius hard to deal with. All right, so again, very opaque, very unclear on the future of Celsius. We will see as more info comes out. But that is the video. My name's Austin. Like always, see you tomorrow. Yeah, see you tomorrow.